Welcome back to Andrew Finance, and we got a lot of stories to cover from the last week in business, including some wild things like Netflix getting sued by shareholders over their stock price drop and Warren Buffett saying he hates crypto. So let's just jump right into it. Okay, so the first thing you have to know about is this class action Netflix lawsuit that's been filed by the shareholders. Now, this filing alleges that the executives committed security fraud by issuing misleading guidance about the company's slowed subscriber growth. Now, to bring you up to speed, Netflix had experienced insane growth during the pandemic, and to many it seemed unstoppable because it was adding millions upon millions of subscribers. However, as Netflix was growing, so was competition from other services, most notably Disney+, Amazon Video Prime, and HBO Max. And this was all well and good because Netflix was still considered the top dog, at least until their first quarter earnings report hit, which reports that they had lost 200,000 subscribers, marking their first loss of subscribers in almost 10 years. Naturally, people looked at this and thought, oh, I guess the unstoppable company actually is stoppable, and sold off stocks like it was 1929 again. This, of course, absolutely tanked Netflix's market valuation, and they lost some $54 billion off their market cap in one day. And it has since been a consistent decline. Now, Netflix, for their part, blamed competition and inflation, the Russian invasion of Ukraine, and also infrastructure issues, and said that as part of their solution, they would be cracking down on password share. This prompted a huge backlash from the public as a lot of prominent influencers came forward, like Moist Critical, Ludwig, and some ordinary gamers, saying that maybe password sharing is an issue, but really, your shows kinda suck. And it's not hard to see where they come from, as Netflix seems to have employed this throw everything at a wall and see what sticks type strategy, and then after they find something that sticks and does well, they cancel it after 2 seasons. Yeah, not a great business strategy. But now that you're current, we can talk about the lawsuit, which says that Netflix failed to disclose that it was losing subscribers, and as a result of that failure, investors experienced significant losses and damages. Now, as much as I'm on the YouTuber side for the why Netflix is going down, for this specific lawsuit, unfortunately, I have to side with Netflix. Because to their credit, they actually did disclose that they were losing subscribers in their first quarter shareholders letter, which not only was sent to investors, but is also publicly available for anyone to read. It's also really strange to sue a company you're invested in, right? Because if they get fined, don't your stocks suffer for that? See, I don't actually know. So if you do, feel free to let me know down in the comments, and while you're down there, I'd love it if you subscribe. Now, speaking of lawsuits and fines, we have Intuit paying a huge fine of $141 million. Essentially, they tricked low-income tax filers into paying for a service that legally they should not have had to pay for. Now, if you don't know, Intuit owns TurboTax, which is a pretty scummy company, as they, along with H&R Block, lobbied politicians with an insane amount of money in order to keep taxes complicated. The idea for them was that if taxes were easy to file with the government, then nobody would ever use their services and they would go out of business, or at very least lose a lot of money. So the IRS agreed to their terms, saying that they could do that as long as they offered a free filing options for income earners under a certain threshold. Intuit said, sure, we can do that. And then they immediately did everything in their power to try and trick low-income taxpayers into paying for tax filing. Now, there's a lot to this story because federal filings are really complicated, but what it boils down to is that Intuit used TurboTax to trick low-income tax filers into paying for a service that they had previously agreed they would not charge people for. So the state attorney filed a suit claiming that Intuit violated the Consumer Protection Act by engaging in unfair and deceptive marketing by saying it was free, and then once people had filed everything, they would then slap them with the sike. It's actually paid. However, as much as this seems like great news, it's actually not, because even though Intuit has to refund 4.4 million people for the overcharges, they don't actually have to admit any wrongdoing, which, can I say, is just bizarre? This is the government equivalent of a mom saying she won't get mad if you just tell her the truth and what you did wrong. Except in this case, for some reason, the government actually doesn't get mad and just says they did nothing wrong, but they have to pay the fine? Like, they definitely broke the law, right? Also, as a side note, whenever my mom said that she wouldn't get mad if I told her the truth, she actually didn't get mad, so shout out to my mom for being a reasonable human being. Next, we gotta talk about Warren Buffett giving his most expansive explanation for why he hates crypto. Now, if you don't know, Warren Buffett has been pretty vocal over the last few years about his stance on crypto, saying that it's not worth anything, doesn't really exist, and just a bunch of other crypto is useless type talk. In fact, in 2018, during a Berkshire Hathaway annual shareholders meeting, he called it rat poison and said that, quote, in terms of cryptocurrencies, generally I can say with almost certainty that they will come to a bad ending. He's since stuck by this view for the last 5 years, and again at a 2022 shareholders meeting, he says, assets have to have value and have to deliver something to somebody, and you can come up with all kinds of things, but in the end, this is money. And then he held up a $20 bill. still. Now, this is certainly a good time for him to say this because cryptocurrency, and Bitcoin specifically, has been on a steady decline, dropping 37% in the last year and 43% just in the last 6 months. But it's also hard to not just chalk this up to boomer says boomer things. Because we are seeing crypto being adopted and widely used, whether that's with private companies like Overstock, PayPal, or Starbucks, or with entire countries like El Salvador, which has made cryptocurrency a legal tender alongside the US dollar. However, with all that being said, with Warren Buffett's huge knowledge, wealth, and influence, if he says crypto has no value, then it is something that's worth listening to. Even if you disagree with him, he has enough influence to sway public opinion for or against it, and so if he says something to hurt it, then there's a distinct possibility that we'll see that reflected in its mainstream adoption. Now let's talk about some celebrity news and how Biaheza, the YouTuber financial extraordinaire, lost $500,000. By the way, I have no idea how to pronounce his name. So he posted this video last week talking about how he's woken up to a lot of days in the red recently as recession fears continue to prompt a market sell-off. And this is being pushed a lot by YouTubers who are predicting scary things and doing so by putting fire in their thumbnails and talking about the inevitability of a recession. So in his video, he talks about how the Fed is slowly reeling in all the stimulation they gave during the pandemic, so there's no longer this constant access to free money that there has been for the last couple years. And with inflation rising at record rates, people are spending less money, which leads to the stock market slowing down or dropping, which leads to people seeing their money drop and leads them to freak out and sell off their stocks. Now, there's a lot more to it than that, but basically the stock sell-off has caused Biaheza's portfolio to drop by an insane $500,000. But his video touches on an interesting question that we'll actually be talking about in the next section of this video. Is now the time to panic and sell, or is it just a temporary dip in a market that's going to go back up soon, so you should buy, and then just net a bunch of money when it inevitably buy, and as soon as the economy bounces back, you'll make a small fortune. Again, we'll talk about this in the next section, but Biaheza says that he's planning to buy, and ride the gravy train all the way down because of one very interesting study he came across recently.
I found this study in a CNBC article that Bank of America did, in which they took all of the stock market gains and losses since 1930, and they found that if an investor missed the S&P's 10 best days each decade, the total return they would stand to get over these last almost 100 years is 28%. But if, on the other hand, the investor held steady through the ups and downs and didn't miss out on those 10 days out of every decade, the return would have been 17,715%.
He then goes on to talk about how you should be in the market for the long term, and having a short losing streak doesn't really mean much. Because even though there's been a bunch of hiccups over the course of decades, market returns have not only been positive, they've actually been pretty good. Which of course leads us to our next and final section. Is a recession actually coming? Now, if you were just looking at financial YouTuber thumbnails, it would be easy to predict that a recession is coming. I mean, just look at these. Here's Graham Stefan predicting a recession, Andre Jeek predicting a recession, Mark Tilbury predicting a recession, Meet Kevin predicting a recession, and all of them can't be wrong. Right? Well, yes and no. Then let me explain what I mean by that. While it's true that things like record inflation and insane housing costs seem to indicate that we might be headed for a recession, let me try and alleviate your fears with 3 simple facts. Unemployment is dropping, consumer spending is increasing, and companies are still raking in record profits. The fears come from the fact that we predicted a certain number for these metrics, and we haven't quite measured up to that. But that doesn't necessarily mean that things are actually going backwards, except for the US economy, but it only went backwards just a little bit. However, I'm going to go ahead and counter my own point and say that while I do disagree with these YouTubers, there's something to be said for their influence over the public perception of the economy. If enough people think the economy is going to shrink, then they're going to start acting like the economy is going to shrink, and this is going to be things like selling off stocks or maybe saving more money than they normally would, and that in turn could cause the economy to shrink. So honestly, I guess we'll just have to wait and see. Thank you so much for joining me today as we covered this last week in business. I'd love to know what you thought about my thoughts or the stories themselves or anything else at all in the comments down below, and don't forget to subscribe to the channel, and I will see you all next week.